traders, Gary Wagner here, approximately 10:30 in Honolulu, 4:30 in New York on Tuesday, 22nd day of October 2013, and this is the daily report for gold and silver. After a disappointing jobs report, we had a clear and defined continuation of the breakout as the markets have moved up substantially. 1340.80 current print in gold puts it up about $25 with a high of 1346.40. Silver also trading higher, up about 50 cents, 22.69 current print, low 21.82, 22.92 on the high. And we'll talk about our present outlook all here on today's daily report. We're looking at half-day candles, Japanese average on the right, standard candlestick format on the left, just to give us an idea of what we're looking at. And this is one of those rare occasions where the actual candle in a standard candlestick format looks very, very similar to a Japanese average, and that's because it's trading so very near the highs of the day. When we take a look at this chart, we can see without a question of a doubt the kind of spike that we saw, and this is our breakout, little bit of consolidation and a continuation of this upward move. The other thing that I feel is critically important is the fact that we broke through a substantial resistance area roughly at 1430, 1435, and are just coming up against our next real resistance area, which is going to be 1340, and we'll talk about that on our next chart. Now, when we take a look at this weekly chart, the first thing that we need to pay attention to is this is that long-standing resistance line. This is where we were unable to take out the highs when the market hit 1435. And so we're still a ways away from that, but here's the interesting thing, and that is an intersection in the market between this sloping resistance and 1373 right in here. That's going to be a pretty critical mark, and I think that the market has the opportunity right now to trade as high as 1373 before finding some sort of resistance. Now, I've gone ahead and blown the chart up, uncompressed it so that we could take a look at different levels of support and resistance. And we talked a little bit yesterday about the fact that I felt that 1300 should be absolutely a line in the sand and that should hold. I also mentioned that our next real level of resistance is a band which begins roughly at 1330 to 1335, 1336. And that is this 38% retracement. It is simply a retracement from this large rally here, 1181 up to 1433. Market comes down, and this is that 38% resistance area. Well, we're clearly above that in terms of a closing basis. Without a question of a doubt, our next real level of resistance is that intersection. That intersection is roughly 1373, and I believe that the market has a real opportunity to initially hit that. We'll have to see if it kind of backs off from there and then moves higher, or if it backs off and then starts to go back into a defined downtrend. But I can tell you this, we have effectively found this market finding a bottom earlier this month at these lows right in here, which would be roughly at around 1250. The market has resiliently come off of that and has moved up roughly $90 from that low. Now, when we look at our daily chart, and that's what we're looking at here, we can see something quite interesting, and this is what I am observing. When we take a look at 1313, it is a 76% retracement on one of my fib retracements. Market comes up. You can see this is that tremendous $40 up day, followed by a little bit of sideways trading consolidation in the market, and it just pops above this particular point following the jobs report. But when we look at these series of tops in here, and I'm going to try to focus on the bodies of these particular candles and the highs in here, you can see that we have come up in terms of a level. Here's this particular high. Let me draw it as straight as I can. We are shy of that particular high. I'll go to this high here. And again, I'm trying to draw it as straight as I can to see where it matches. And we are closer to this particular high, roughly the 1340 area. So we saw the market really come up, correct a little bit, come up, trade sideways before hitting these lows at 1250. And now we're getting a straight defined move. If we can, as I said, if we can get moves above this, my sense is the next real level that we will see gold go to is approximately 1370 to 1373. Now, the other daily chart that I do want to take a look at this morning is the daily chart in which we have our really tremendously long resistance line, and that's, as we've talked about, drawn from these series of tops. We had a compression triangle that we had put in. We talked about the fact that it dipped below it. We had the breakdown, market comes to 1250 and then begins to trade back up. But as of Friday, you could see that it was just butt up. We did have resistance in this area, but today that's a different story, because when we take a look at this market, we have clearly broken into this level. And that's why I think that this is our next real resistance level, roughly at 1373. And again, it's based upon this descending resistance line. Now, there is another way to look at our current level, 1340, and possible resistance in this area. And to do that, what I have done is I have created a fib retracement from this last correction in which the market traded from 1434.35 down to about 1250. When we do that, a 50% retracement takes us to 1340. So we do want to see if it finds any kind of real resistance and backs off, but my sense is we should have a pretty clear path right now, as I said, up to roughly 1370. Now, recently we have been talking about silver and the various support and resistance level, weekly chart, Japanese average format. Clearly, we talked about the level of support that we had at 2160. Clearly, we can see that that market is held. Currently trading 2271, so it's actually broken above the 2244. That's our 38% retracement level. So real resistance that I believe we are currently looking at in silver, of course, is going to be twofold. 2350, 2347, of course, is a 23% retracement. And the top of this most recent rally, which took us to $25, that would be the level above it. Now, in terms of strategy, we are going to look to scale into the market, and I believe that you have an opportunity in terms of the upside in gold, call it 1370 to 1375, currently trading at around 1339. That's the current print. In terms of silver, our next real level that we believe it could go to is about 2350 before finding any kind of real resistance. And of course, that's based on this 23% retracement level. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update and review. Bye-bye.